How do you know when to take your required minimum distributions? I'm going to ask 𝗵𝗺𝗺𝗺 here, financial advisor and founder of Fundamental Wealth Designs. The RMDs, isn't it dictated by law when we take the RMDs, Billy?
Yes, it is. But let's start with what is a RMD, because I get this question a lot in the educational workshops we host. So a required minimum distribution is the IRS telling you that on all those tax-deferred accounts, IRAs, 401ks that you have, that you've accumulated over your lifetime, they want you to pay tax on them. So that's what a required minimum distribution is. For most people now, it's age 73 that they're going to need to start taking their RMDs at.
Yeah, it used to be, what, April 1 following the year, you turned 70 and a half. And the penalties used to be a lot higher too, right? Wasn't a 50% penalty?
Yes.
Tax penalty.
They've graciously reduced your penalty from 50% to 25%. So we can thank them for that. But you did mention one thing. So it used to be 70 and a half. Where they came up with these, we don't know.
It was done in Congress. So of course, it was written very well there.
But I would say that since they've extended RMDs, they've opened what we call our tax control window. So from 59 and a half until now 73, in the future it's going to be 75, we now have control over when we want to pay our taxes, which is what we talk about each and every day when we meet with clients. How do we pay the least amount of tax possible over our lifetime? And part of that is preparing for when your RMDs are going to come in.
You just said the word taxes there. I just want to bring this up real quick because a lot of folks think they're going to pay less in taxes when they're in retirement because they're no longer drawing from a salary. But here's the thing. When the RMDs kick in and you're already taking Social Security and you need money from those investment accounts, do your tax brackets really go down in retirement, Billy?
We don't see that they go down very often. And ask yourself this, do you want to live a lesser life in retirement? Because that's what paying less taxes really would mean, is living a lesser life. And we find that people don't want to live on less than they are when they're working. So we find that they're going to end up in the same tax brackets in retirement. And the second part of that is we know taxes are going up in 3 years. In 2026, if nothing changes, taxes are going up. So we already know that that's going to be the case. So we need to prepare for that. And we need to actually, some of the things we do is, how do we figure out how to not have to take RMDs? Because we put our money into Roth accounts or whatever it might be, but let's take our distributions now from our IRAs and not have to be in a situation where we're forced to take distributions later.
Right, and doing that Roth conversion strategy, that takes a little bit of time, right? This isn't something you can just do in one visit in the office.
Absolutely, and we did a video on Roth conversion, so if you find it in our little loop here, watch the video on Roth conversions, and that might answer some of your questions on when's the right time to take a Roth conversion. But that's one of the ways we use in order to avoid the forced RMDs at a later part in life where you're going to have to pay the taxes on that. We try to strategically plan around how your, what we call qualified distributions, are coming into your bank accounts.
Billy, it might seem like an easy answer, but as I find with a financial advisor, there's so many other things we need to consider. So I know that your RMDs are a scheduled date that are designed by Congress, whether it's 72 or 73 right now. But to find out how and when you take your required minimum distributions, please speak with a financial advisor first. You can talk with 𝗵𝗺𝗺𝗺𝗺 of Fundamental Wealth Designs. You can also go to the website if you'd like to learn more. Go to fundamentalwd.com.